Let's jump into where the markets are moving today. Let's talk about money flows. We do have the small caps up the most today, up almost 0.75%. So they're pushing higher. If we look at yesterday's price action, they're still within the wick. They sold up and then got sold back down. If we look at the 30-minute chart, you can see the market had a pretty large gap up. And then, of course, it just got hammered and sold off through most of the session. And then a little bit of a short squeeze, a little bit of a buy the dip pop into the closing bell. And that was even the same with the NASDAQ. I think we saw a big gap up. It sold for most of the day, filled the gap, and then had a little bit of an end of day pop to the upside. And I feel like we're in that scenario where there's just a lot of people that are actually really bullish still. And we tend to see, near a market top, we tend to see these little pops into the closing bell where people buy more. They say, a lot of people say the institutions buy at the close, not at the open, or execute trades at the open or close. And sometimes we've gone weeks where almost the last 30-minute or 10-minute bar on the charts are either a strong rally every day back to back or a strong sell-off. And this is telling us there's still people buying and buying the dip, every pullback, and accumulating, expecting this market to go higher. I know a lot of guys on TV are saying the market's going to go a whole lot higher. Again, our short-term analysis, our technicals have turned down when we look at our strategy. We can identify when the market changes trend. It only takes a few bars to potentially change a trend. You can see that. We've had that a couple of days ago in the S&P 500. We also had it in the NASDAQ a day earlier. So the market is definitely struggling. Now, it doesn't mean the market can't take off and go higher. It could very easily pick up and start to go back up, and it could generate a new trigger for us to get back in and ride the market up with another full position and take advantage of it. You can see here on our sentiment chart on the right, we do have a green bar for the NASDAQ, so it is firming up. It's not deep green, but it is firming up, and we're very close to potentially this market either tanking and having this exhaustion kind of reversal bar, or it is going to pick up speed and just keep muscling higher with the Magnificent Seven driving things. So we just have to wait and see how that unfolds. It doesn't really matter which way it goes. We just have to make sure we manage our positions and not guess or trade emotions, just follow price. So today we do have money flowing into stocks. We're going to see a small gap higher. Money is coming out of bonds. We are seeing bonds pull back a little bit. I'll just zoom out a little. You can see a small little pullback in bonds. We have the dollar moving down a little bit, and we have gold up about 0.75%. It was up quite a bit more. It got sold back into, so it's pushed up into resistance. It actually poked to some new all-time highs, and it's getting sold back into with some volume here. We'll see how that goes. Now, this chart does look pretty, the gold chart looks very bullish. This, you could say, hit some new all-time highs. It's getting sold into. I do like to look at GLD only because it's regular trading hours. You can see here, if we look at GLD, it was trading at a high of about 114.45, 114.45. So somewhere right about where my cursor line is. So during regular trading hours, where the majority of the volume is and the majority of what traders see, GLD hasn't broken out, or gold hasn't broken out to new all-time highs yet. You can see all these highs here we still have to get through. I do think it's going to go higher. I'm looking for a discretionary trade to get long, but I don't want to jump the gun. I'd rather jump in as it's breaking out and starting a run than be in here. It could very easily shake things out. It could very easily trade sideways for another month. I really kind of want to jump when something breaks and catch that initial surge and lock in gains and move stops up and manage it that way, then just get in place and hope that it breaks out. There's always the chance that we get in and it's a fake out and it reverses down. That's part of trading. That's a risk with every single trade anyone makes. But overall, the chart pattern looks pretty good. And the miners are pointing to higher pricing. We do have gold miners. They've already broken out. They've already extended. The early money, the speculative money, has now taken that move. And now I think gold is about to follow suit. In fact, if we take a look at the Fibonacci extension, based on this really strong high volume sell-off to this high and down to this low, and if I just carry that price forward, you can see GDX came up to the 618 level. It traded here for a very long time, trying to eat through this resistance. And then finally it's popped up and hit that 100% measured move. So, in a perfect world, we might even see the stock market or miners pause and pull back for a few bars and gold actually now takes its turn and takes the lead and breaks out. So we'll just have to see how that unfolds. I mean, this is very, very short-term speculative thinking here, but that's kind of what I think could and is very likely to happen going forward. Again, I'm not a fan of silver or really the miners at this point. I think gold is the one primed and ready, so I'm just going to cover gold. Let's take a look over at oil real quick. Actually, you know what? Let's go back to, let's look at the dividend stocks, the SPYD. So this is for people who hold a lot of dividend stocks. The chart doesn't look that good. It is a series of, definitely trending lower. If we look at the short-term analysis, it's had some pretty good sell-off and some high volume. It's really kind of struggling here. It looks like it could very easily roll over and continue to go a lot lower. I think a good chunk of this has to do with the energy sector. If you look at XLE, it's been moving down and it closed down near some multi-week lows yesterday. Of course, energy stocks pay some pretty good dividends, so they're a heavy chunk of the dividend portfolio. Same with the IYR, the real estate REITs in general, not just IYR, but real estate in general. They have been moving down for a couple of weeks. They have a bearish pattern and look like they're ready to potentially sell off as well. You can see some pretty heavy selling volume in this space as well. So those who have the buy and hold and with dividend stocks have been under a little bit more pressure than the stock market, which is up near all-time highs, and this one is obviously nowhere near all-time highs. And that's one of the problems with dividends. I've done articles on this. Dividend stocks are down 8.9%. Probably if we were to overlay the stock market or whatever, it would be up dramatically more here. Let's just take a look at if we take a look at the S&P 500 for that same time frame. It's trading. It's trading higher anyway. That's a key point here. So there's a time where dividend stocks are great, the beginning of a bull market. In the late stages here, they struggle and they sell off more than the stock market in many cases. So they're actually a ticking time bomb, as I have referred to them before.